you grew up in a generation where we weren't working for the same company for decades. It just
doesn't happen anymore.
Well, I didn't really come into the job and the career that I wanted to do for the rest of my life until I was in my late 30s, which is obviously what I'm doing now. And, it's my own company, so I have nowhere to go now. But so I probably will retire from this company. But all that to be said, for the most part, people just aren't doing that. They're changing jobs. And when you change jobs, the group life insurance benefits that you had previously do not go with you. So that's why it's still very, very important, even when you're young, even when you do have maybe a decent amount of coverage through your group life insurance policy through your employer, to still get your own personal life insurance policy that travels with you, because you might not always work for another company where that's going to be a benefit. You might not, always work for anybody else. You might become self-employed and start your own company one day. So you need to have something that's portable, that's unique to you.
So assisted living, now you have full-time people who work on site who have medical training. Usually there's at the very least a registered nurse who is on duty at all times. It is fairly common in assisted living facilities where prescription medications are brought to your apartment. It's still going to be an apartment type of facility. And they make sure that these things are done. They might have some form of housekeeping services. Well, they'll come in and they'll change your sheets and change the linens and everything like that with some form of regularity. You're going to be paying more for that.
Welcome back to another edition of the Retirement Planning Happy Hour. Eric Douglas, Chris Vaughn, Family Wealth Planning Partners out of Louisville, Kentucky. Thank you very much for listening to us and watching us for another week here. And actually, we're saying another week. We're doing back-to-back episodes today.
It's a really good day in our office.
So normally when we do these, sometimes if I have a particularly good bourbon, I might pour myself a little bit of a second pour. I did not do that in the last episode because I knew we might be doing the second episode back to back. We were tempted,
but we were smart enough not to.
But because we have these two bottles of bourbon here, the Old Foe Black Label, which we did on the last episode, which would have been last week when we published it, and now this week we're going to do the Blue Label, which I will let you talk about in a little bit more detail. But yeah, we are doing back to back. We need to catch up because we've with the move and some other things that have been going on, we've gotten a little bit behind. Snow,
holidays,
yeah.
We're both going to be out of town next week when we do this, so we got to catch up.
Unless we want to do one in Atlanta next week or something, maybe. But
that might happen.
Well, we'll see.
Sitting in the airport might be entertaining. What we're talking about.
Yeah, I don't know if the stuff we talk about at the airport when we're waiting on planes and hopefully not getting delayed is going to be appropriate for this podcast. But all that to say, so what we're going to talk about now. Insurance, right? And I know everyone loves insurance. Everyone loves to talk about insurance. It's so much fun. But I think what we're doing on this one is we're coming at it from the point of view of, do I really need this?
Yeah.
Meaning, we'll kind of go through some of these different types of insurances out there that are insurance products, I should say, that are sold to folks. And it's whether or not, is this something that we really need?
Right.
Because insurance agents are really, really great at, kind of giving you a full hardcore press on why you need insurance and all the bad things that can happen. And, you need this in case this happens, and you need this in case this happens, and you need all these different types of insurance, and you have all this coverage that ultimately most of it you probably don't need.
Right.
So we heard that term, do I really need this? And I think that kind of sparked a few ideas and on some ways that we can approach this. So that's what we're going to do today. So that's the topic for today, but why don't you kind of reintroduce the Old Forester Blue Label that we're going to be tasting today?
Okay, so just following up from last week, these two bottles, the Black Label and the Blue Label, as we commonly call them, these came from the same warehouse. They came from the same floor of the same warehouse, which was actually Warehouse K, Floor 6. Now, they're obviously different bottles because these are both single barrels. Right? Mm-hmm. They're both barrel picks by a couple of different companies. The Blue Label we're going to do today is by Kroger. And before you mock that, if you're not familiar with it, Kroger does really, really good barrel picks.
Oh, fantastic.
I've never had one that I didn't like. And I've had a lot of barrel picks, as we've discussed, that are less than desirable, to be polite. The Black Label that we did on the previous episode was from Evergreen Cox's Wine and Spirits here locally. They also do a great job. The black label that we previously did is exactly the same thing as the blue label when it's picked. And then after that, they cut it down. So what we're doing this week, this one is not cut down. This is exactly the way that they picked it. It is, everybody ready?
The raw, uncut version.
128.9 proof. I have had this hotter than that, but not much. I think the highest one I've ever had was 131 something. And if you can tell the difference between 128.9 and 131, more power to you. I can't.
Yeah.
They're just too similar at that. So I'm expecting that we're going to get the same tastes that we had last week, just intensified. That's what I'm expecting to hit. I have not tasted this particular bottle yet, so we'll find out as we're going through talking about insurance.
Which is probably...
Makes you want to have a drink while you're talking about it.
I was going to say it's probably good that we have a little pour of bourbon here to talk about insurance because it's
right.
everyone's favorite topic, right? It puts most people to sleep. So let's maybe start off with, the most common question we get, especially from young folks, do I need this? Yeah. Term life versus permanent life insurance.
Okay, so if we're talking specifically about life insurance, obviously there's lots of different types of insurance. Do I really need
And we're going to
this?
keep this very, very simple because we're not going to go down the rabbit hole of all the different types of permanent life insurance.
Oh my gosh, there's so many.
We're not going to do that.
So when we say perm, we're referring to permanent, which let's make it simple. Every type of life insurance there is, except for term life insurance, is perm. Mm-hmm. So we're not going to go down that rabbit hole. Term being pure life insurance. You pay for it. If you die, it pays out. If you don't die, it doesn't pay out. It's simple. Mm-hmm. Okay. So when we're talking to young people, do I need this? Term? Yes.
100%.
You should. Bad things happen to good people, and sometimes that is an early departure from this earth. Who is dependent upon you, specifically dependent upon your ability to produce income? So when we're talking to young couples, if something happens to one of you, what happens to you when that income goes away? Because I can assure you, the employer is not going to continue to make that paycheck when that person is no longer on earth, right? So do you need that insurance? Yeah, you absolutely do. I think the debate is not do you need it, it's how much do you need, right? And we talked about that last week. The rule was that we found on the internet was 3 times your salary. I disagree. I think in most people's cases, especially young people, it's a lot more than that.
And it should be more because it's so cheap when you're young.
Oh my gosh, that's the thing that gets me. When I get somebody at an event that I go to or at church or something like that, and they know what I do, and they'll say, "Hey, I'm 22 years old. What do I do?" Max out a Roth and get $1 million worth of term life insurance. If you want super simple, generic advice, that's a pretty good one right there, right? So deal with the second half of that. Why do I need, $1 million or whatever it is worth of term life insurance now? There's nobody dependent upon me now. I'm 21, 22, 23 years old because it's dirt cheap now because you're so young, right? You have no known health problems. You're young, which means you're highly unlikely to make a claim on this insurance. So you're going to get this stuff for pennies. Get the 30-year version of it. Now it takes you all the way into your 50s when you're at a point in your life where it's pretty good chance that there is a family who has to have your income, right? If your income went away, they're in trouble. Well, you're paying the same price at that age that you were when you were 22, 23. And that's why you get it early. I don't know anything else that you could put to that.
That's why you get it early because it's a lot cheaper than if you try to get it at 30, 35, 40, right? Every birthday, the premiums go up.
Every medical problem that might could potentially make you go up or make you uninsurable. Get it now while you can.
Get it now while you can while it's still really, really cheap. And, eventually, hopefully, assuming that's in your plans, right? Most people want to, grow up, get married, have kids. Someone's going to rely upon you at some point. So it's a pretty good rule of thumb to be able to get that stuff, as much of it as you can when you're young. One thing I want to talk about too, because, another in the vein of why do I really need this? Well, my employer has X percentage or X amount
Excellent
of dollars that they cover in life insurance, and that is very dirt cheap.
Yeah,
because you're talking about group life insurance coverage through an employer. I think it's very much worth noting that for the most part, gone are the days where you work for a company and you work there for 40 years and you retire and you get the gold watch and
that's over.
Those days are pretty much long gone, right? That's just not, especially for Gen Z or whatever. I don't even know what what generation we're in now. As far
Gen Z
as
is still entering the marketplace. I don't know the numbers off the top of my head. I think Gen A is the next, or Alpha is the one behind that, and they're in the 15, 16-year-old.
Okay, but let's just say, so if you're me, where I'm like right on the border between Gen X and millennials,
we'll claim you because you fit in with
us. I definitely identify as. This is the only time you're ever going to see me identify as anything, right? But I identify far more as an X than a millennial. Yeah. But all that aside, right? So if you're like kind of me, X, millennial, below. Mm-hmm. You grew up in a generation where we weren't working for the same company for decades. It just doesn't happen
anymore.
It doesn't happen, and I didn't really find out what I wanted to do. Well, I didn't really come into the job and the career that I wanted to do for the rest of my life until I was in my late 30s. Mm-hmm. Which is obviously what I'm doing now, and it's my own company, so I have nowhere to go now. But so I probably will retire from this company. But all that to be said, for the most part, people just aren't doing that. They're changing jobs, and when you change jobs, the group life insurance benefits that you had previously do not go with you. So that's why it's still very, very important, even when you're young, even when you do have maybe a decent amount of coverage through your group life insurance policy through your employer, to still get your own personal life insurance policy that travels with you, because you might not always work for another company where that's going to be a benefit. You might not, always work for anybody else. You might become self-employed and start your own company one day. So you need to have something that's portable, that's unique to you.
I'm going to add to that. First of all, that's an excellent point. I would agree. As you move from one company to another, they may or may not offer that type of life insurance, even though you needed it. So let's just say, for argument's sake, because it's a nice round number, that a $1 million policy is appropriate for you, right? And let's just say that your employer, and this is fairly common, they will offer a multiple of your salary for free. It doesn't cost you. And it's usually one or two times.
1.5, two times, something like that, yeah.
But you can usually get additional coverage
for really cheap.
To a multiple. And the most I typically see is around 5 times. Right?
Which I recommend that too, by the way.
Okay, so here's what I like to do on this is, all right, let's just say you need $1 million. And let's say, because I can do the math in my head, that you have a $100,000 a year salary. So if your company offers a 2X, that means you're getting $200,000 basically for free. Company's paying for it. So you still need $800,000. Well, a couple of things that can go in here. Number one, you can get additional at work, but usually if you get more than 2 times, it has to be underwritten. So you still got to go through whatever kind of health portfolio or profile, that they require. It also, in this scenario, it doesn't take you up to that $1 million that you needed, right? So the way that I do this with every client that I talk to when we have this conversation is, you need the hypothetical $1 million. We know we can get $200,000 at work for free. So the other $800,000, I don't particularly care if we get it through a standalone policy on your own or through a combination of what you get at work and a standalone policy. I don't care. Mm-hmm. Which one is the lowest amount of money out of pocket? And 10 years ago, it was almost always you got it through work up to what their max was, and then you got a standalone policy for the additional. The last couple of years, I've been seeing a change in that for healthy people, right? Younger, healthy people, as a rule, I'm seeing that it's actually cheaper to get that additional coverage as a standalone instead of through work. But the point is, run the scenario both ways. Who cares as long as it's the cheapest policy? That really is the key to me.
Mm-hmm. All of those options are better than permanent life insurance. So especially if you are younger, but let's just broaden this out and say probably 97% of all people.
Okay.
When asked the question, do I really need permanent life insurance? The answer is no.
No.
You do not.
Does that mean that it's not a viable option? There's a time and a place for it. But the key word that you use there, and this is what people ask, is do I need it?
Absolutely
no,
not.
You don't.
Especially because a lot of times permanent life insurance is sold as an investment.
Yep.
It is not an investment. It is life insurance. You have to get underwritten. And if it is an investment, it's a god-awful, horrible investment.
There's so many better options.
It's basically a very, very expensive savings account.
Yeah.
And then,
but wait a minute, Eric. It works like a Roth IRA. How many times have you heard that?
Yeah. Well, yeah.
You're talking about an IRC 7702, and what you're doing is you're borrowing against the policy.
Taking a loan, tax-free.
Yeah, it's a tax-free loan, but now the loan is still gaining interest on it, so it reduces cash value. I've seen these work, but for every one that I've seen work, I've seen 100 of them that the options are just so much better than trying to do that. So if somebody's really pushing that kind of thing, it's because there's a commission involved. And I just don't know another way to say it.
And the reality is, too, when it comes to any of these types of insurance products, the more complicated it is to understand, really the less likely it is to be that big of a benefit. And if it was that fantastic, trust me, everybody would
be doing it. Right?
Everyone would do it, and not everyone does for a lot of reasons, right? It's not that beneficial. Now, that doesn't mean I said 97% of the population doesn't need it. There are definitely some people that do, and there are instances where it does make a lot of sense. One of the ways that it's sold is it's a type of life insurance policy that you can never outlive. Right. So term life policies have 10, 15, 20, 30-year time frames. Permanent life insurance policies last for your lifetime. Right. So you never have to renew. You never, if you get cancer, it's still there. You still have it. Right. So even if you become uninsurable, you still own some type of a life insurance policy. So there is some value in that. But really, the most of the viable say options, or the most viable case uses or case studies for when permanent life insurance is going to be most valuable for you specifically are going to be dependent upon, do you own your own business? Do we have some major tax liability that we're trying to avoid? Things like that, right? There's very, very, very specific instances that for 97% of the population, and I'm just using that number, it very well may be 98% of the population. It's not really going to be that applicable to.
And actually, one of the few exceptions to the rule, we're going to be dealing with a couple of subjects down, so we'll come back to that one. All right, so life insurance, we've kind of beat on that one a little bit. We could do episodes on that and people would fall asleep while they're driving down the road listening to us. I don't want to do that.
Nope.
Let's do a different type of insurance. And I think the next one on our list is probably the type of insurance that is overlooked the most.
Probably, yeah.
Yeah, and that is disability insurance. So this is one, I think, quite frankly, disability insurance might be more important than life insurance in many ways. And here's why I say that. I'm gonna be morbid when I say this, and I don't mean to be. When you pass away, right, you are no longer a consumer to your family. So if you think about it, so you've got you and your spouse and your 2.5 kids and your 1.5 pets, right? All of those people are consuming, materials, food, the things that we buy, all that stuff. When somebody dies, as brutal as this might sound, they're no longer taking, but they're also no longer providing, which is the point of the life insurance, okay? In the case of you becoming disabled, now you are still consuming, but you are no longer providing.
And you're also consuming, in some cases, more.
More, that's exactly right. And
providing less.
Statistically, a lot more people become disabled, at least temporarily, during their working years than people who die during their working years, right? There's a reason why term life insurance is so cheap. It's because it very rarely has to pay out a claim, right? They just don't. Disability insurance is very expensive because it's very common. 1 in 4 people will be disabled for a period of time during their life. Now, this is where I think we need to qualify that, because an insurance salesman is going to use that statistic and they're going to say,
they're going to scare you.
25%. Well, there's 4 people in your household. That means one of them is going to be, oh my gosh, right? Okay, that's a scare tactic. That's not the way to look at it. when we say 1 in 4 become disabled during their lifetimes, sometimes those disabilities are over a period of weeks. Mm-hmm. And by the way, most people think that disability, when we think of that, we think of a bodily injury, right? We get the visions of somebody who has to have, they lose the use. You got to be careful saying that too fast. They lose the use of part of their body, say a leg or an arm or a finger, for a permanent period of time. That's not the way most of them have it. Number one, most of them, the disability is temporary. And number two, believe it or not, it's more caused from illness than it is injury. Mm-hmm. That's a statistic most people don't understand. So when we start talking about becoming disabled, we are typically talking about a period of time. So now the question is that period of time longer than the vacation hours that you have saved up at your job or something like that? So that is where disability insurance comes in. So the first thing that I would tell you is, because it is very expensive. I've written, I don't know about you, I think I've written 3 or 4 insurance or disability insurance policies in the last 6 or 7 years.
About the same.
Because I will go out of my way to make sure that you're maximizing what you get at work, where it's a lot cheaper.
Yeah.
If you do a standalone policy, just get ready. The numbers are big. Yeah. And it also depends. This is another one that people don't understand. The cost of disability insurance is based upon your likelihood of becoming disabled and not being able to do your job. So if you think about this for a second.
Think about the type of job that you're doing.
Think about the type of job that you're in. So if you are in a job where you physically don't need to do anything, what we do for a living, we don't do a lot of physical things in our job. If
we drink at our job.
Sometimes twice in the same day, right? If one of okay, so I'm in a terrible car accident and I become a paraplegic. I can no longer walk. I am in a wheelchair for the rest of my life. That does not affect my ability to do this job at all, other than the period of time that I have to go through whatever physical therapy or something like that. Okay? Yep. So that's one side. The other extreme, think about the surgeon or the dentist. And actually, believe it or not, dentists are the highest premiums for disability insurance because by the very nature of what they do, they have to have the dexterity in their hands, but they get bit a lot, right? It sounds weird, but I've got a couple of dentists that are clients and friends, and they get bit a lot. It's one of those things that if I ever had a thought of being a dentist in my younger life, that might have kind of cured me. It's like, man, if somebody bit me,
something I've not really thought about.
I would react well.
I've not really thought about that, but maybe I need to ask my dentist next time I'm in there.
Ask your dentist how frequently they get bit, and you'd say, well, I don't do pediatric cases, so you wouldn't get that bit that much. I'd be willing to bet the problem is just as bad with some adults as it is with a lot of kids. But that individual, right? Because a bite on your hands in the right spot causing nerve damage, you lose dexterity. Think about a surgeon, same type of problem. One that always blew my mind when I would start looking into these policies is with teachers. And you think, okay, well, teachers have some physical parts of their job. That's not what I'm talking about. The different types of teachers have radically different expenses. So here's what I mean by that. When we talk about white collar and blue collar, right? High school teachers, middle school teachers are considered to be white collar. Mm-hmm. White collar jobs as a whole, other than medical's different, have lower disability insurance premiums because they can typically do their job even if they are physically injured, right? Elementary teachers are not classed from a disability point of view as white collar. They're classed as gray collar. I didn't even know what that meant.
I've never even heard
until I learned about disability insurance. It's gray collar because they have to deal with the kids physically.
Yeah.
Kindergarten and preschool teachers are classed as blue collar because they have to pick kids up.
Yeah.
All right. When you think about it, you're like, okay, that's weird. That doesn't make sense. Okay. Not a lot of high school teachers are going to pick a child or a student up and place them on a countertop or in a chair, for example. Yeah. But a preschool teacher does that as just part of the job. Every time you bend over and pick somebody up, you run the risk of injuring, say, your back or your legs, and now you can't do the job. So they actually pay more premium. So long story short, the type of job that you are in is going to radically impact the kind of premiums you're looking at, because the risk of not being able to do your job is changed by the type of job that you have.
And you've been talking specifically about employees at other companies.
Correct.
The contracts that I have written over the last several years, not that we do a ton of this, is usually going to be for self-employed individuals or independent contractors.
Right.
Because they don't have a company where they're able to get those benefits through. And if something were to happen to them and they are no longer able to do their job, there's no vacation days.
Yeah.
they're just out of money, right? So the ones that I've done disability insurance for, like there was a photographer was one.
Sure.
If something were to happen to him and he can't work, he doesn't get paid.
Right.
There's no residuals there. There was an IT professional that was doing freelance work. There's actually two IT professionals that were doing freelance work. They make pretty good amounts of money doing freelance work, kind of as independent contractors. They're not tied to any specific company, but there's a risk there that if they can't work, they don't get paid.
Right.
So, so we did some disability planning there.
I think, we'll wrap this one up, because disability insurance is just such a boring subject to talk about. And the people who are listening right now are probably going, would you please stop? Yeah. Okay, I'm fine. But this is an overlooked one. Most employers do provide certain levels of disability.
And the bigger the employer is, they'll usually work with you anyway.
Yes, correct. Now, the one thing that I do want to point out, a lot of people will really get wrapped up in short-term and long-term disability. Short-term typically means 6 months or less. Long-term means 6 months or more, but that's not a hard, fast rule. Just look at it from a total disability protection point of view. If you become sick or injured and are incapable of doing your job, do you have enough coverage that your family is not harmed, seriously harmed by that? Because your life insurance is not going to pay out if you are injured or sick and you are stuck at home. It does not help you there. That's where you got to have this type of coverage.
And it's going to sound, once again, to your point, morbid.
Yeah.
Right, when you say this out loud, but if you were to pass away, your spouse could potentially go get remarried and replicate your income, right?
That's not true with disability.
That's actually very common, especially if you pass away young, right? With disability, if you have a disability and you're no longer working, there's no way to replicate your income. And you are still in the marriage and you're still a consumer, but now you're no longer a provider. And so that's why it's important, especially if, like, for self-employed individuals, I think that's a far bigger risk, to make sure, depending upon the type of work that you're doing, obviously. But it's definitely a risk. And insurance, at the end of the day, is all about what? Risk planning. That's what this is.
It's about the mitigation of risk. That's really all insurance is you're passing the risk on from yourself to a company.
So, long-term care planning. This is one of your bailiwicks.
This is okay, so I have a designation in this one. So, yes, it's my bailiwick. All right. Here's the one that I get from people when I'm talking to them is, what if I end up in a nursing home? Okay, that's a legitimate question, but I will tell you most people don't end up in nursing homes.
Correct.
Right? There's a fear. And there's a legitimate
fear. If you go to a nursing home, it's usually the last stop on the train.
Right? Most people don't leave nursing homes and go home. They just don't. And if you've ever been in a nursing home, and I think most of us have probably been in one at some point in time or another, it's never a good thing. The doctors, the nurses, the attendants, the other people that work in nursing homes, I feel fairly confident in saying none of them grew up with their ultimate goal in life. I want to work in a nursing home. People just don't think like that. So these are not the happiest places on earth. This is not Disney.
You're doing God's work there, too.
Yes, absolutely. So that's I think that's the fear, is all of those things that we were just talking about. People get that wrapped in their head. Oh my gosh.
We get that question a lot.
Yeah, and we do. We get that question frequently. And then you hear the stories of people who live in nursing homes for 10, 15, 20 years. So combine that image in your head with the thought of being there for decades, and you understand why there is an extreme fear of nursing home planning. I would say probably 75% or greater of all estate planning starts because somebody was afraid of a nursing home, right? The whole concept of long-term care insurance is because people are afraid of it. So let's get some reality out here. Most people are never in a nursing home, and the ones who are not there very long.
What's the average stay?
The average stay in a nursing home is like 9 months, right? That's people you're not in there for years. To your point, you go to the nursing home because you're at that phase in your life where
you can't be taken care of at home.
The phrase that we use now instead of nursing home is full skilled care. You have to have nursing care available 24/7, right? Well, most people aren't in that situation. And when we are, it's for limited periods of time.
And a lot of people conflate or mistake nursing home with like assisted living and,
Bingo,
and retirement homes.
That was exactly where I was going.
There's all kinds of different levels of care up until, ending in nursing home care.
So there's really 4 if you think about it. Everything else kind of falls under one of these categories. So the first one is what we call in-home care.
Yep.
You are still living in your own home. This is the one everybody wants, right? I know I want it. I'm sure you do.
Sure.
Everybody wants to stay in their own home. So in-home care, you live in your home, but you need some kind of care from somebody other than yourself because you can't do everything for yourself. All too frequently, this is provided by family members. Okay, if you're married, so gentlemen, we have a tendency to say, I'll be fine because my wife will take care of me. Well, let's assume you're right. You probably are. I know my wife would, okay? What happens when you're gone and she needs it? That's where we get into some problems.
That's usually
right? And by the way, guys, this is just not what happens to us. Statistically, we don't get sick over a long period of time. We typically are at home living a relatively normal life. We can't do what we used to do, obviously, but we get sick, we go to the hospital, we don't come home. That is the way the life of the male human being tends to end. Women is where they're more drawn out, right? Their bodies just don't give up as easily, maybe. I don't know. But anyway, the first one is
there's probably a joke to be made in there.
There's
but
so many. And
I'm not going to
do it.
I'm not going to be the one.
I know my wife's going to listen to this and she's going to go, yep, I know exactly what he was going to say. Yeah. It's probably something she told me. But anyway, that first level of care, that in-home care, that can really run the gambit. It can be a spouse simply taking care of you or an adult daughter. It's the oldest daughter is the one who usually does it.
Yeah.
It could be people from church. It's any number of things. It could be somebody that you actually have to pay, right? There's just about everything involved there, but it's something that the care that you need is not 24/7. Okay. So the next type. Now we're going to talk about what's called independent living. And a lot of people conflate this with nursing home, and boy, they're totally different. So independent living is you are living in a facility where there are medical people available to you, but they're not coming in and checking on you.
It's basically an apartment.
It is. It's exactly what it is. It's an apartment, but the apartment is typically going to have all of the stuff for people who have some level of physical ailments. They're going to have, the bathrooms and the showers that have got all the rails and everything. They're always going to have the rope that's, I hate to be ugly when I say this. I've fallen and I can't get up.
Well,
remember those horrible commercials, but it does happen.
It happened to my grandmother.
Okay, so an independent living facility is going to have those kind of things, and they are usually going to have somebody on site who has some level of medical training.
Yeah.
The idea is that you're around people who are in roughly your stage of life.
Yeah.
They usually have a lot of activities for groups, blah, 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 blah. Okay. But you said it right. It's an apartment. Mm-hmm. It's just an apartment around like phase of life people. But the one that people misconstrue that one with the most is assisted living.
Yeah.
Independent living and assisted living on the outside look the same, but on the inside they're not. So assisted living now, you have full-time people who work on site who have medical training. Usually there's at the very least a registered nurse who is on duty at all times. It is fairly common in assisted living facilities where prescription medications are brought to your apartment. It's still going to be an apartment type of facility. And they make sure that these things are done. They might have some form of housekeeping services. Well, they'll come in and they'll change your sheets and change the linens and everything like that with some form of regularity. You're going to be paying more for that.
Usually you can negotiate a lot of those services.
Correct.
Or you go to different facilities that offer different levels of service.
Absolutely right.
So even within assisted care, assisted living facilities, you have all kinds of different levels, sub-levels, if you will, within that.
Right.
Because some facilities will offer X, some are going to offer Y.
Exactly right. And that's why the first caution that I would have on this one is instead of going out and figuring out what you want and going out and shopping for it, there are multiple companies out there that it's their job to know what's available. Mm-hmm. They have relationships with all of the different facilities in your community. You go and talk to them and they find out what you need. And then they go shop for you. Mm-hmm. And you don't pay them for that service. They are paid by whoever they place you with.
Yes.
So it's a matter of you finding a company or an individual that you trust that will actually place you properly, right? Based upon the money that you need to spend, the needs that you have, what that facility offers. I've seen these facilities where once a week, whether you need it or not, there's a bingo game, and that's all they do. I've seen other ones where there's all kinds of activities, and they leave site, and they've got a bus or something like that, and they go on tours around the area. There's all kinds of things that they do. So these run the gambit. But you notice the one thing that we haven't talked about yet, long-term care insurance.
Yep.
Because long-term care insurance doesn't pay for any of the things that we've talked about, with some exceptions.
Yep.
Right? So if you want care in your home, you are not going to get a traditional long-term care insurance to pay for that. You're going to have to figure out how to cash flow that. If you just have the desire to go into independent living or assisted living, long-term care insurance is typically not going to pay for that. And I'll tell you what else won't pay for it at all, and that's Medicare. Mm-hmm. And a lot of people are like, well, I put that on Medicare, right? No, you can't.
Correct.
Right? Medicare does not pay for long-term care. It pays for some rehabilitation, things of that nature, but it does not pay for a long-term care facility. So don't think that that's part of it. All of those things are not nursing homes, right? The full skilled care. So when you're starting to talk about this kind of thing, when you're starting to talk about, should I get long-term care insurance? Should I have a long-term care plan? This is where you need to be talking to your planner, and it needs to be built into the overall plan, because if you're considering this separately, you are probably not doing a good job of it.
And there's a ton of ads out there, right?
Oh my gosh,
don't go broke in a nursing home, and they feed into all the scare tactics, right, that make you think, oh no, I'm going to lose all my money if I have to go into a nursing home. What am I going to do? And I don't have this kind of change, right? It's just a matter of planning for it and understanding truly what the real possibilities of some of this stuff happening. So we talked about, okay, looking at this through the lens of, do I really need this?
Right.
Okay. Here are the situations when you probably do need some type of a long-term care policy.
All right.
We already talked about who's the person that's probably going to care for you the most. Usually the oldest daughter.
It's the oldest daughter.
And I whenever I talk about long-term care planning with clients, I always tell this story. The house that I'm currently in now, when we bought it, had a true mother-in-law suite.
Okay.
Like an actual separate entrance from the garage down to the basement, and there was a wall in the basement, and there was a master suite and a kitchen, and so like a full mother-in-law suite in the basement. The people that lived there previously had a child with autism, and so the mother-in-law basically moved in to kind of help
with
everything. So we walk in, and as I'm showing my mom the house for the first time, where I'm showing her the mother-in-law suite, and she kind of looks at me and she cracks a joke about, oh, maybe this would be perfect for me. And I kind of look at her and I said, don't you get any ideas? This wall is coming down. And I was like, you know damn well you're going to go live with my sister. Right? and my mom's dying. She's laughing.
Sure.
Like,
yeah, no, I get it.
Because she knows that too, right? And my sister is well aware. Like, there's a room in her house already for my mom, right? So, but but usually it's the oldest daughter that is the one that kind of takes care of the parents. And I also know if something were to happen to my wife's parents, guess where they're probably coming, right? So, but I always say that if you don't have kids, you're probably someone that maybe potentially could benefit from having some type of a long-term care insurance policy.
Right.
If there's an age gap, so if you are a spouse, if you are a wife more specifically, and your husband is, let's say, 5-10 years older, and there's a really good chance that he's probably going to pass away before you.
Right.
You are someone, especially if you don't have any kids, and there is an age gap, then you're probably someone that could benefit from some type of a long-term care insurance policy. To me, those two criteria are usually the biggest factors in determining whether or not you need one. Obviously, you can add in some things like history of Alzheimer's, for example, memory care issues, things like that. Although you'd be amazed at how long people with memory care issues can stay at home with in-home care,
right,
or just, family care. And usually by the time the family has thrown up their hands and saying, I can't do this anymore, you're kind of close to the end anyway, right? So it just goes back to the statistic that we were saying at the beginning, right? The average stay in a nursing home is about 9 months. So, you can... I don't want to scare people into thinking this is necessary for all people. And most people will, and especially in the plans that we run, we are typically including the cost of long-term care planning or long-term care needs
there it is,
within the plans for them to be able to self-fund.
I was just going to suggest, I don't know how many financial plans I have written and am working at this point in time. They all blur together after a while when you're looking at it from the outside. In the last 7 years, since 2019, I have written 2 long-term care policies.
I've written 1.
Right.
I've written 2.
And there's the point. The reason I've written 2 is not because I couldn't. It was because I usually could find a way inside of the normal part of the financial plan to fund this. If it happens, we have the ability to cash flow this. So going back to, what we were talking about, most people want to stay at home. Your traditional long-term care policies will not pay out if you stay at home. They're not going to pay out inside of an assisted living facility or an independent living facility. They're only going to pay out if you go into a nursing home, which everybody is trying to avoid in the first place. Because we already talked about they're just not desirable places to be. Even the expensive ones are not desirable, right?
Which is why I said the likelihood of you being a widow, or the likelihood of, if you don't have kids, and the unlikelihood of you having someone to be able to take care of you, you are far more likely to have to go into some type of a facility sooner than someone who does have a spouse to take care of them, or someone who, kids with an extra guest room, right? So
long story short, coming back to the original question, do I really need this? Do you really need to have a plan? Yes, absolutely you do. And, you pointed out there are some people who are higher risk than others. They absolutely need to have a plan. Do you need to have the insurance product to back up that plan? Maybe. There are ways to address long-term care concerns without using insurance to do it. And there are a lot of different types of insurance. The traditional long-term care insurance policy is almost gone away. And the reason for that is they're not profitable to the insurance companies. So they raise the rates, and nobody wants to buy an insurance policy. The rates keep going up, and they're never going to get their money back. So they've gone into the hybrid space where the long-term care is packaged with permanent life insurance or with some form of annuity. Those are becoming more and more popular because
asset based.
Right, it's asset based because if you don't use the policy, you still get something out of it, or your beneficiaries get something out of it instead of just wasting the money. The point here is have a plan. And then you don't have to worry about it. If it happens, you've got a plan that can kick in. And if it doesn't happen, you don't have to use the plan.
What's interesting about long-term care is the cost of underwriting certain segments of the population.
Right.
So when you're writing it's like a traditional life insurance policy, it's far more expensive to write a policy for a male because they're more likely to die at an earlier age than a female, right? With long-term care policies, it's actually the inverse.
Correct.
It's actually far more expensive to write a long-term care policy for a female because to the point that you made earlier,
she's more likely to use it. That's
she's
exactly right.
She's more likely to use the long-term care because they typically are going to live for longer. One,
women live longer than men,
and they also they need the care for a longer period of time because they tend to outlive their husbands. Right. And because they outlive their husbands, there's no one to take care of them as much. Right. The other subset that's interesting, and I learned this years ago, and it kind of totally threw me off guard when I heard it. But it makes sense when you actually hear the rationale. Is Asians.
Really?
They're actually they're cheaper to underwrite because they don't use it.
But that's a cultural issue.
It's 100% a cultural issue because family is just so ingrained in their culture, and they're elderly. You hold your elderly in esteem, right? And it's not that you don't do that in American culture,
but they take it to a different level.
But it's a different level, right? And you take care of your elderly, and it's expected as a child that you 100% bring your parents home and take care of them. Like that's just very much ingrained in their culture to a far greater degree than it is in America. So I learned that, and I was like, "Oh, that's actually interesting."
That is interesting.
So it's cheaper to write a policy on an Asian because they don't really ever use the policies. So I found that very interesting. Has nothing to do with anything. Interesting side note.
So all right, so we've hit several types of insurance and what people talk about. So we talked about term versus perm insurance. We talked about disability. We've talked about long-term care insurance. I think the biggest issue here, and we kind of hinted at it just a minute ago, is having a plan, right?
It's almost like we're a broken record sometimes.
It does. Right? Having a plan to deal with this. The whole purpose of insurance is to protect you, to pass on risk of something happening from you shouldering that risk to a company shouldering that. That's what insurance is. If we had a crystal ball that says, here's the things that you're going to deal with, you know at this age you're going to have a car accident that's going to cause these problems. You'd have the perfect auto insurance policy for that. And by the way, we know that at this age, you're going to get sick with this particular ailment. And you would have all those things in place. We don't know what's going to happen. And that's the point of having insurance. The problem is the way that insurance is sold.
Yeah.
Right? So insurance as a general rule is sold with fear. If you don't get this insurance, look what could happen to you, right? I mean, turn on the TV. I'm at that age now. I'm 54 years old right now. I'm at that age where I am now being targeted. The types of TV shows that I watch, the streaming that I watch, the podcasts that I listen to.
Okay, boomer.
They've got me figured. I am not a boomer. I've got the T-shirts at home with the Gen X guy, doing this. I'm at that age now where these companies are starting to target me, and I'm seeing what people who are 10 and 15 years older than me have to deal with. And it's like, man, if it's this bad now, imagine what it's going to be like when I'm 65 or 70 years old. They're really, really good at targeting you. They are really, really good at scaring you into feeling like you need something. It's like, okay, so I understand why people feel this way, why they come in and ask these kind of questions. Let me come back to putting out a plan. Yes, this is a self-serving comment when we say this, but when we talk about putting together an insurance plan, who's putting together that plan? Is it an insurance agent? I promise you they're going to find a reason for you to buy these products. Mm-hmm. Or are you talking to somebody who is looking a little bit more 100,000 foot view? Mm-hmm. Right? The way that I like to explain to clients from an insurance point of view, I'm going to develop all of your financial plan, your income, all of those types of things. And then I'm going to go look at what are the things that can go wrong, that cannot be forecast, and can I protect you with insurance? Or can I protect you with your own cash flow? Ultimately, any kind of insurance, you're hoping that you're wasting your money. There's no type of insurance where you're hoping that you're going to make a claim. Mm-hmm. You don't want to make a claim on your medical insurance. You certainly don't want to make a life insurance claim or an auto claim or a homeowner's claim because a tree fell on your house or somebody broke in and tore something up. Nobody wants to make a claim on insurance. So can we cash flow these problems, or do we need to pass that risk off? If you are working with a planner who is actually an insurance agent by trade, they're going to show you why that insurance is absolutely critical. If you are working with somebody who is a true planner and they're looking at everything, then is there a better way of dealing with it than insurance? Or if insurance is the best option, do we have the right kind of insurance? Mm-hmm. Are we getting the correct amount of coverage?
Yep, for sure. You don't necessarily need insurance to cover the costs of a lot of these different types of events. So that's probably a pretty good place to wrap up.
Let's wrap this up, and let's talk bourbon. The first thing that I notice, as compared to our last episode when we got to this point, the glasses still have a little bit in them. Well, now, they're not full. It's not like we have not been enjoying it.
I've burned a few nose hairs. Yeah.
This is warm. 128.9 proof, I believe we said. That'll do that. But that being said, talk to me about what you taste.
I wouldn't call it an easy drinker.
Okay.
It is very flavorful. And I will say the first few sips were definitely okay. I need to take this slowly.
I need to go slow.
But no, it's good. You know, obviously the more you drink, the smoother it gets, right?
Yeah.
Not that I've drinking much of it. No, it's good. I mean, you used the analogy last time, right? With Old Forester, it's bourbon.
Right. There ain't nothing fancy about this.
It's good bourbon. It's consistent. You know what you get. You can say the same thing with the hints of oak and, you know,
the caramel
and the
all
honey.
All the stuff I expect in a glass of bourbon.
Yeah, it's good. It's strong. It's definitely strong. When I watered it down a little bit, it brought out a little bit more flavor, a little more flavorful. Not quite as strong, obviously, as you watered it down, but I mean, it's a good bottle.
Ooh.
It's a good bottle. It's just not something you got to be careful when you drink it.
I agree with everything that you just said. I didn't pick up. I put a couple of drops in mine. It didn't really change anything. It just cut it down just a little bit. That's what I love about Old Forester. It tastes like bourbon's supposed to taste like. Mm-hmm. There's a lot of other things. I've got enough of a sophisticated palate at this point that I pick up some odd flavors here and there and some fruits or nuts or anything. There's none of that stuff in Old Forester.
Yeah.
It tastes like corn, the sweetness of corn. It tastes like caramel. It tastes like oak. This is what I want bourbon to taste like. That's the reason I'm an Old Forester fan. I don't have to think my way through this stuff. I just drink it, and it's just good. Now, if I compared the two, that's a little bit different. It's like picking between your kids, right? Which one do I like better?
I like the Black Label. More flavor. It was a little more flavorful, less hot. Yeah. Well, I mean, it's 100 proof, right?
I'm going to be real honest. I don't think I can pick between the two. Yeah. I like both, and I like them for different reasons. The flavors are the same. The Blue Label just has more of it. But I don't want to pour more.
Yeah.
I'm probably going to get a little bit of heartburn if I poured any more than what I've already got. Whereas the 100 proof, the Black Label, I wouldn't hesitate to pour a second one, right?
Yeah.
That I will also tell you that the Black Label costs less. Not a lot. I think the Blue Labels you're seeing out there now are in the $80 range. The Black Labels are in the $60 to $70.
Okay. That's a lot more palatable to me.
It's a little bit more palatable, but if you think about it, it's because the yield on the barrel that produced this, they're going to make more bottles because
Sure.
they're adding water, whereas they're not adding any water to this. So I really love both of these, and I'm not joking when I say picking between the two is like picking which one of your children is your favorite. That's a horrible question to ask because you love them both.
Yeah. Well, the Black Label is my favorite.
I will tell you this. I would not even think about trying that in a cocktail. It would burn right through anything that you put into it in a cocktail.
Yeah.
All you would taste is the bourbon. This one might actually be good. I've never tried it. I have no intention of trying it because I like it too much. Of putting that in something to see what it would do. It would probably make a really good mint julep come Derby season.
Mm-hmm.
But I'm still not going to try it and waste a bourbon that good by putting something else in.
It's an expensive mint julep for sure. So
if you've never tried Old Forester, both of these are just off the scale.
yeah.
If you've got a little bit of a palate that can handle the higher proof stuff, you might want to cut this one down a little bit. That's basically what this is.
Yeah. What?
You know?
To be clear, the Blue Label is not bad. I do
They're
like the Blue Label. It's very good.
Wonderful, yeah.
Yeah. So,
But they're simple. They're bourbon. This is what bourbon was supposed to taste like. I have absolutely no doubt in my mind that somebody who is a purist is going to love both of them. So I highly recommend them. Just remember, back to what we were talking about on the last episode, these are both barrel picks. And what one person likes doesn't mean that everybody is going to like that. So keep that in mind.
all right. Well, that's a pretty good place to wrap up.
Yep.
So, with that being said, thanks for enjoying the episode. Hope you found it interesting and enjoyed our ramblings on bourbon and financial planning, and in this specific case, insurance.
And insurance.
If anything we said relates to you and you might have any more questions, please give us a call at our number, which is easily found on our website, fwppartners.com, in the show notes, whether you're watching on YouTube or listening on podcast. Thanks for joining us, and until next time.